And good morning, 6:40 a.m. Monday morning, April 22nd. We're at the end of a 3-day weekend, Good Friday. The markets were closed, and it is exciting day. One of the things I love after 3-day weekends, beginning of the month, I always love opportunities. Um, After the market, you could say resets itself in some way, and it's almost like a new day, a new open. You call it opening because you have people's portfolios generally balanced. And so you see, it's just a good indication of where the direction will go. And here we've had this great liquidation event, which has caused people to reset their accounts. We've had a 3-day weekend, again, causes people, especially Thursday, especially short sellers don't want to hold over the 3-day weekend. But short-term traders don't do that. And it's a new day, of course. Capital requirements, futures, margin requirements get reset every day. So um, today will be a particularly good day to sort of see what's going on and see what's happening. Now, I had taken this approach and decided that based on the environment we're in after an opportunity of shorter term trades because of this great volatility that now that we've got all these events that reset people's capital, that it's better to try to see what trends develop and hold a little bit longer. And I think that strategy is working out fairly well. We're literally barely into doing that, but it's only been a day. But I think that, but certainly holding over the weekend turned out to be incredibly profitable, although Friday was a really rough day. So just to recap, Friday we had at one point we were down 65,000 was uh, the most we were down. And one of those was short crude oil. And we took a $30,000 loss on crude oil and turned around and bought it. And here it is down $1.60. So crude oil sort of whiplashing us around, and we certainly don't want that to happen too many more times. But the decision right now is to hold. So we're down 20,000 in crude oil right now, but I think we're going to hold. Um, I'm going to do a reset on some of these accounts and how much we should be trading using a different formula than what the exchange margin requirements are, because those don't appear to be too reliable. I'm just getting too much volatility in some of these accounts, but they're down 33,000 in copper right now. But net, we're up 122,000 in the account, and that is thanks to gold and the euro, both up huge today. Huge moves today. We're up 80,000 in the euro, and actually the euro is actually surpassing gold in how much we're out. Very similar margin requirements, 150,000, 165,000. But look at euro shining. So the euro's up big today. But still, I don't even think that these markets have had a full day to balance themselves and figure out what's really happening. And so, for example, crude oil, um, which has been, like I said, a bit of whiplash going on here. But, additionally, the market, it's a first retracement, right? It's had one of the best charts coming out of the liquidation that we had, and it's sort of in retracement mode, so first break mode. So this chart, if we look at the so here's the daily coming out of this liquidation event. You can see here. Just here's the daily. So you have a whole week. I mean, here's Monday, Tuesday, Wednesday, Thursday, Friday, and ending literally at a high. So that's a very strong indication that you literally, and of course, probably do a lot of short covering. But look at this range expansion on Friday, where a lot of the other markets didn't. I mean, the stock market didn't do anything like that. So, um, but yeah, here's Monday, Tuesday, and Wednesday were sort of flat to sideways. and then Thursday and Friday were strong. We can see we did run out of momentum here a bit, um, but not by a lot. These bars got a little smaller, but this was a Friday, so here's this first correction. But I mean, if this is the bottom of that correction, it's still, you can draw these trend lines, and you can still see it's above trend line, meaning it's actually, I can draw these trend lines in a lot of ways, but it's you know even from that low, this is a liquidation event, so in some respects, we don't even need to be trying to try to really assess, okay, what is the trade? Here's a low, and there's a low, and that trend line's it's even further from that trend line. So, and that's just the overnight move. So hopefully the government will start buying again during market hours if it hasn't now. So today will be an important day just to see crude oil can hold and resume its trend. Now, of course, it's influenced a lot by the stock market. The stock market's down. But the stock market's not as down. It's not doing the sort of behavior it's been doing before, where it's just crashing. You're waking up to a crash. I think it's just going to continue down. Um, Again, apologize for all the indicators in the message chart formation, but I do like this, all these indicators. I'm gonna remove this, remove this strategies real quick to get a clearer picture. But Bollinger Band, but I just find that so useful. But yeah, here's your Bollinger Bands. But yeah, here's this. This is not a healthy rally off the bottom, even with this huge move up, and that's the best we could do. So if you get this sort of momentum, I mean, this shows up. This is just a massive move out of this selling environment, and that's okay, right? The correction of that. I mean, that's okay. But you want to see it return quickly to that high. If this is the sort of, and it didn't. It couldn't muster much. So here's the next day, and that's it. You literally have the smallest amount of top you follow through, and that's all you got. And then you have this gap up, which I don't consider gaps real buying or selling. It's sort of read those a little bit differently, and that's it. And that's all you got. This was a negative day. This was a negative day. This was a negative day. Friday flat, and here we are. So you have a whole week of down, even though it didn't appear to be down a lot, and it's sitting. So this is Thursday's low, and it's right there. Look, if it breaks this and it breaks this, people are going to get really excited about it going down again. So stock market does not look healthy. And we took it short right here. This is the spot. And we've stayed short. And we've sat through all this again. That's why what we're doing right now. We're just going to stay short some of these positions. Um, Now, normally you get a big windfall overnight, up 100,000, 150,000 like this in a bunch of positions, and you just jump out of everything, say that was a great day, and you wait for the next opportunity. But again, this is a new. You don't want to do that if it's a newer trend. You want to do that if it's like been doing this for a little while and it's sort of business as usual. But now this is the overnight in the Nasdaq, and this is a fairly short-term chart. Each one of these is 2,000 bars. This is not a huge gap down, trade down, bounce, trade down, bounce, trade down. So it's finding support. Again, it's like I've been saying, people, they've bought their puts, they've got their insurance, your puts expire at the end of the month, and they've probably got them out for a couple of months. So people are probably relatively well insured against another crash. So it's not just going to crash down. But if the economics suggest that the market is going to continue down, which is this sort of thesis I have, this environmental thesis that commodities are going to do well, currencies are going to do well, and the stock market and bonds are going to do very poorly in this environment, and this is going to frustrate the shit out of people. investors in general, because that's what investors own, stocks and bonds. But those are going to do very poorly. Again, this is mismanagement of the economy. This is why you can have where everybody loses situations, is because the Federal Reserve is just a big organization for stealing money and ruining the economy for everyone except the bankers. So um, it's eventually things come home to roost, and this could be a big thing. And again, I keep pointing to what I've been pointing to about the bond market and its failure to hardly rally in this crisis situation to show that it's not that's not part of the thesis right now that people want out of bonds. And if you look at the performance of gold, I mean, this is just, I mean, this is, and I've been in these environments before, and it's looked like this before. This guy's going to go for years. I mean, this is to 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 be up like this and make your new high, and you have your flag, and then you have your follow through, and this I would expect. But then you need some time after you make your new high, and it's not taking any time. I mean, it's just go, 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 gadget. Look at the euro. So I mean, this is going to turn into a dollar crisis very soon. Look at the euro. The euro is another mismanaged inflationary currency, and look at this thing. You know, it's finally, you see all these wicks where it keeps rejecting these highs. People seeing opportunities to get out. It's eventually just going to quit doing that, and it's just going to go into a big rally mode. All the currencies are doing that. Interestingly enough, all the currencies had 3-bar triangles, and they're literally all strong, and they literally all just took a rest on Friday, except for the Canadian dollar, which was literally surpassed its Thursday high by just a few ticks. So it's the only one that didn't have a 3-bar triangle, but technically it's doing this. They all look the same. British pound is up big. This is just going to turn into a dollar. Don't believe the inflation figures. Don't believe anybody. This is investors. I mean, the free markets are the free markets, even though they're manipulated. You can use all the propaganda in the world you want, but currencies are telling you the story. The bond market's telling you the story. That at least for the moment, the dollar is trash, absolute trash, and it appears. If you look at the longer term charts of these currencies in general, it appears that this is the beginning, of a pretty big new thesis. And I can go any time frame you want. Here's monthly in the euro that you could see. This is going back to 2012 in the euro. So if this thing starts a new rally, this is a new thing. Remember, this is the month of April, right? So it began on April 1st at the very low of this green bar, and we're at the very high of it. So this has just been a huge move in the euro. All these, gold is going to look that way. Look at gold on the monthly. Look at the pound on the monthly. Look at the yen on the monthly. I mean, even the yen, look at this weakest chart out there against the dollar. And, we've got this. It doesn't look like much now, but, again, and it may not do much because they're inflating the yen a lot. But, these currencies are really sending a certain type of message, bottom getting put in, and where is this capital going to sit? People have, I mean, you have the U.S. dollar being a safe haven for a couple decades now, and investors are, these top hedge funds are really smart. They're really happy. So that's what we're doing. So in terms of other positions, so soybeans, I'm perfectly happy with the soybeans. We were down 19,000, and it didn't mean anything to me. The chart looks fantastic, and it's just maybe 60 contracts. The exchange of order requirements, what is that, 2,000 for one soybeans contract is probably just too low. just having 60 contracts is too much, but it looks really reliable. And the soybeans, I may be wanting to add buying corn, adding to soybeans, but being really aggressive with this if we ended up with some sort of a spring rally in the grains, which I think is brewing just because we've got, you look at soybeans, so this is monthly, um, you know, you see this, there's your bottom during coronavirus, and we've got inflationary situation, but this is a market, this market particularly seasonally resets itself every year. Some cycles like mining and oil are a little bit longer form years and they're boom bust cycles, but the grains are pretty much every year. Um, and so you have an opportunity every year to sort of reassess where it's at, and it didn't really break this. So this is like a new cost of production level around $10 a barrel, which is crazy because it used to be $4 a barrel about 10, 15 years ago. The daily still looks good, looks really good actually. There's your liquidation, and it had one day really to break all these lows, and then it's been up ever since 1, 2. So this is really a true 5 SMA trade. 1, 2, 3, 4, 5, 6, 7, and so there's day 7. It closes below that, and now it's back above it. It didn't overnight. It was just sort of a matter of a weak market, but this is really a true 3-bar triangle here, consolidation area, and it's holding. It makes those new highs, and like I've said, it looks a little bit like gold in terms of its strength coming out of that liquidation event. And here's a little bit. Here's the 2,000 contracts per bar. So Monday, Tuesday. This is Monday, Tuesday, and Wednesday. Rough Thursday, Friday. Just this little overnight gap up. But anyways, you could see this kind of consolidation. It's holding well. We've got strong seasonal tendencies coming into the spring for another 6 weeks. So soybeans looks good. So NASDAQ, we looked at copper, we're down 35,000, and I'm sort of waiting. Again, this is not a happy trade. Right now. It's following gold, so gold's up such a huge amount, but I'm expecting this to be following the stock market a little better. Now, we got a good price. I mean, I shorted it like here, and I would have expected a retracement, but it's got this. But again, I look at this and say, well, this is the overnight stuff. So maybe I'm justifying things. Maybe this chart looks a little bit stronger than I expected. I wasn't expecting it to get this artificial support like crude oil. Crude oil is relatively strong seasonally, where this is sell time for copper. And the July contract, which is what we're short, I mean, this is sell time for copper. Um, and I expected to follow the stock market a little bit better, but so I'm going to try and wait for it today to run out of gas, but this could be, even if it's going to run out of gas, it's making new highs now. It could take a couple of days to consolidate to lower. So copper is the biggest one that we need to jump out of if it continues up. And here it is up a good amount overnight against our position, and crude oil is doing the opposite. So sometimes markets are reasserting trends, and sometimes they're retracing them at the same time. But so crude oil moved against us and copper moved against us, and those are the big donkeys in the account. I mean, look, if you look at, we're up 122,000 overnight. We were up as much as 150,000, and the two big donkeys are copper. We're short copper, and it went up, and we're long crude oil, and it went down. So. Anyway, I think today is just going to be important of how they trade and how strong they are. But we'll hold tight on those. Everything is really hold tight. The market's moving in our favor, hold tight, and I'm sort of got my fingers crossed. I think that these crude oil and copper, we just need to wait and see today. Crude oil to reassert its trend, want to see how it trades during the open and closing hours. Um, and copper, the same thing. See if it's going to follow the stock market lower. But yeah, I think the stock market isn't going to do much today. Um, I think maybe we'll have some morning rally. We're up as much as 150,000 now. We're up only up 120,000, so it makes me re-question what we want to do. But hopefully, we're not going to go back to 50 or 80,000. That's going to be a little bit disappointing, but that just means we need to wait. I think. I think we're just gotta be patient because I think we're right on these trends. So that's what's going on right now. Um, so yeah, this the stocks I think they can break. They're very close to Thursday's low, which is a big point. They appear to be turning low for the first time after the major liquidation event. So these could catch a lot of momentum. So big time opportunity, I think, to stay short the stocks if they can break those lows. Crude oil, we're going to hold. Gold, we're holding. Euro, we're holding. Copper, we're holding. British pound finally had that large range expansion up, and wish I was long it, but the euro's been outperforming it, and again, these are correlated trades, so sometimes just picking one is better. Picking the stronger, the two is better. Live cattle and lean hogs feel like we missed out on these rallies coming out of the liquidation event because these have both been so strong coming out of here. You can see how strong this has been and just been chop, chop, chop higher. So a lean hog doesn't look as good, but especially Friday breaking through these old lows. And these charts actually look a little bit similar to coffee. But stronger. It's like they're back into their old range, whereas coffee's not. So watching seasonals on a lot of these: coffee, cocoa, sugar, and cotton. Here's cocoa. Again, I'm still waiting for a seasonal break and a short here. That's just sort of my thesis right now. Stayed down here a long time, short covering, but went right back. Moved up again, went right back. So it appears I'm waiting for it to break the seasonal low. We'll look at the seasonal chart in a second. Cotton, oh, there's your liquidation event. Are we going to get some sort of a spring rally? We're waiting. This is fundamentally a pretty weak market. In sugar, this looks like a buying opportunity, but I think it's weak for a little bit longer seasonally. But if you look at this longer term chart, and it's trying to set up here, but I think a lot of people got too long counting on it coming out of this situation, and it's short here. But that's what we're looking at sugar. So a lot of these um, softs, I'm really focusing on seasonals right now because the charts in the seasonals appear to be lining up for a lot of these. So, if you look at sugar, it's still weak coming into May. So we've got another week where May is fairly weak, but June is normally a very strong. I mean, it averaged up 6% for the past 20 years. For sugar, that is a huge move up, and it's same thing is showing in sugars. You have this lows put in June, and then the strong rally into the summer. Um, so it doesn't look quite the same on this one, but it looks completely different actually. But you can see this big lows getting put into June in sugar. So, but because it's been weak, I'm more looking for the turn here than I am to short it in here, and maybe an early rally out of here, considering the commodities thesis. Um, so here's cocoa. So I think we're sort of around here. So that's why I'm looking short. Maybe the seasonal buyer will quit buying and we'll get a break into June. So that's the cocoa. Coffee. So I consider us here. So, but I'm more looking for a short. So I'm sort of waiting for another month and a break in coffee. It's been up. Coffee and cocoa both have been up and been major strong markets for the past year. And I just think the commodities have run their course. We've had our crisis buyers securing their supplies, and I just think they're both done. Um, and the other one to look at, um, we looked at sugar. So cotton, again, in any sort of weather rally, we do have a little bit of a weather rally. It usually peaks out May 15th, May 10th, a little bit sooner than the grains, but um, you can see the grains can have really big rallies into the spring and summer. And that's sort of what I'm banking on with corn and soybeans. I think they're not planning enough right now. Um, so it'll be interesting, exciting week, and we're down to only being up 117. So we've still continued to retrace these overnight moves, and I'm just going to sit through this, and unless things change, and just we expect these sort of retracements and moves when we're trading a little bit longer term, and we just gotta sit back and let the charts play themselves out, let the fundamentals play themselves out until we get the big moves, because this is literally chop, chop, chop time, except for gold and the euro, and the currencies, which are just gangbusters to the upside. Those can continue for a while. These monetary markets just keep going. But some of these other markets that want to chop lower, we just got to let them sort of play themselves out. And the same thing with crude oil. Again, the thesis with crude oil being we're going to continue to get artificial buying until it gets back up to 70. And that's the only reason I'm long it. The others, copper, I'm short, and the stock market, I'm short. And things going down, they just want to chop, chop, chop lower until we get another till we reach a level that everyone wants to jump ship again. But we've got such strong moves upside, and I think soybeans is going to be that way too. That these big gainers we're having to the upside are going to sort of pay for any volatility issues or patience we need to sit through some of these back and forth markets that we're waiting to go down. So that's where we stand.